This session will be for 45 minutes. Please write your questions in the Q&A box and we will address them one by one in the same order post the presentation. If you are facing any issues while attending this webinar, please write in the chat box. In today's session, we will take you through the health insurance claim process in detail. We will be discussing few common scenarios and real-life situations that people often encounter prior to and during the claim process. We will also highlight a few key pointers to help ensure a smoother claims experience. Our presenter for today is Mr. Gaurang Javeri, or as he is fondly known at IMM as Gaurang Sir. Mr. Javeri has been a part of the insurance industry since 2001, and his journey into the field started from his own personal experiences, which inspired him to help others gain from his knowledge. He is the founder of the IMPL Insurance Division and has been a trusted advisor to our clients, providing expert insurance guidance throughout the years. Thank you, Gaurang sir, for joining in, and over to you now.
No. Good afternoon, everybody. It's a pleasure to be hosting this particular webinar. We are going to look at 4 cases that we have encountered at IMMPL with regards to claims. Now, these 4 scenarios or these 4 cases are going to highlight the different methods that insurance companies follow, the different methods that hospitals follow. And once we finish with these 4 cases, then I will run you into how to make cashless claims as well as reimbursement claims. So let's dive straight into it. Let me go to the first one. Case 1. Akash has a base plan for himself, his wife, and for his child for the past 8 years. They had purchased a cover of only 14 lakhs of a family floater. The wife was diagnosed with cancer in 2022. Hospital bills came up to 7 lakhs. And after the incident, they are now looking at increasing the cover. However, now if you look at this scenario, policy was taken 8 years ago for a family of 3, and the sum assured taken was only 15 lakhs, which is low even if it were taken 8 years ago. Now, over the last 8 years, medical inflation has grown by 14% every year. And these are 14% every year, and these are the latest figures of 2024. Cancer is now a pre-existing illness. Any fresh insurance or increase in insurance for the wife will now not be possible because it is a serious illness that she's suffering from, and nobody is going to give her any further insurance. So what does this mean? This means that the 15 lakh rupee cover they have, under no circumstances should this policy ever get lapsed. If it lapses, the Akash and his child would be able to get fresh insurance, but the wife will never be able to get insurance again. So it makes it very, very important to make sure this policy never lapses, and this policy should ideally be now used only for the wife, not for Akash and the child. They should actually look at now increasing their insurance cover through a different insurance company or the same insurance company, but only for themselves, Akash and the wife and the child. Okay. Uh, the options are available are plenty. You can get a 10 lakh rupee policy with a 90 lakh rupee top up at a very reasonable premium, because top up premiums are not as high as base policy premiums. So this in this particular case, the the husband and the child need to take their own insurance and leave this particular policy only for the wife. Let's look at case 2. Maria has been holding a health insurance policy for the past 10 years. Doctor had advised her to undergo a cataract surgery, following which she applied for a claim. While the hospital charged 1.5 lakhs, the insurer settled only rupees 45 lakhs. Now, over here, there is a difference of 1.05 lakhs. This is because hospitals and insurers have an MOU for a lot of procedures, especially procedures which have to deal with implants. It can be a lens implant, a knee joint implant, or a shoulder, hip. It could even be a stent for an angiography. So the hospital and the insurance company, they have an MOU which they do not disclose to the patient or to the client. They are not they're not forced to disclose this. So why did the insurer settle only 45? It is the understanding of the insurance company and the hospital that an ordinary lens which costs about 25,000 will do the job of giving an individual the sight back. The doctor would obviously prescribe a lens that is far better quality or with a far better shelf life, and that lens would probably cost a lakh of rupees. That difference between the basic implant and the special implant that is recommended by the doctor is what the patient will have to bear. Even in a knee surgery or a knee replacement, the joint that can enable you to walk freely again would cost about 40,000. But what the joint that the doctor chooses could be a lakh and a half, even 2 lakhs. That difference has to be borne by um, the patient or the client. So, in this scenario, it is always better to be prepared or to find out from your doctor what kind of lens or implant he's going to put, how much it will cost, and what the difference would be, so that you are aware of the situation before you make the claim or before the hospital raises the bill and the insurance company settles the claim. Let's look at case 3. Samir has purchased a separate insurance plan for his daughter. She was diagnosed with a lump in her breast last year. When they filed for a cashless claim for the procedure that had to be done, the hospital quoted 7 lakhs for the same. The insurance company rejected it. Here, hospitals tend to overcharge once they find out that you have insurance. When you go to a hospital and when you go to an insurance in the insurance desk and tell them that you have to undergo this procedure and you give them the doctor's prescription, the first thing they ask is, do you have insurance? The minute you say you have insurance, they jack up the prices because they realize it is not you who's going to be footing the bill, it's the insurance company who's going to foot the bill. Now, they tend to overcharge, which leads to blacklisting of a hospital by the insurance company because they charge way above what is normally acceptable. If you read the insurance policy document, it clearly says that claims will be settled for reasonable and customary charges. In this particular case, the insurance company decided that the 7 lakh rupees that they were being charged was way too much, and they rejected the claim. Here, what did we have to do? We had to call the insurance company. The patient and the attendee had to insist with the hospital to bring down their charges. We had to request the insurance company senior officers to talk to the hospital to bring down their prices. It took a little time. Eventually, the hospital did bring down the price, and you'll be surprised to know that the surgery was done, the cashless claim was paid, and the total bill came to only 4 lakhs. So they were charging 3 lakh rupees over and above what would actually have been the cost. Recently, if you've read the Economic Times, care insurance stopped cashless claims for all max hospitals in Delhi NCR. Reason given, they charged too much. The discussions are ongoing. Obviously, they will come back with a solution, but no cashless claims will be accepted by care insurance at any of the max hospitals in Delhi NCR. Reimbursement claims are possible. Now let's look at case 4. Arpita bought health insurance for a family through an insurance intermediary. She disclosed her type 1 diabetes as a pre existing condition, but the agent failed to update this with the insurance company. After paying premiums for 5 years, she discovered the intermediary never reported her condition to the insurer. Now, the Arpita was a known type 1 diabetes patient and she was on insulin. She told all this to the insurance intermediary who filled up the form and got the policy issued. As luck would have it, after 5 years, I happened to look at the policy document, and there was no mention of any pre existing condition or any exclusion on the policy. So I asked Arpita to go and check with the insurance company whether her condition was on record or not. Unfortunately, the insurance company came back and said no, there was nothing. The insurance intermediary never informed us, and there is no mention of your type 1 diabetes. In a situation like this, the policy is now null and void. He's paid premium for 5 years, but it comes under the non disclosure part, and unfortunately, she is right now without insurance. So, um, at IMMPL, what we do is when we give you a checklist and we ask for all the medical information, we ensure that everything is declared initially itself. Even after the policy document is issued, we make sure that the conditions, the pre existing conditions, are mentioned on the policy document. If they are not, we get back to the insurance company and ask them to do so, so that it is on record. And when you have to file a claim, you do not have a problem. So let me just talk about IMMPL briefly now. We have a corporate license where we can have empanel three life insurance companies, three health insurance companies, and three general insurance companies. In the life insurance sector, we have HDFC Life, Tata AIA, and Max Life. In health insurance, we have Manipal Cigna and Niva Bupa. And general insurance, we have HDFC Ergo. The criteria we follow in selecting these companies is one, new business premium, incurred claim ratio of the company to make sure that they settle their claims in time and they don't have too much of a backlog. The ability to underwrite greater sum assureds without reinsurance. This is more so for life insurance. The training support that we get from them, competitive premiums and products, and most of all, redressal mechanisms. That is one of the most important factors because it is service related, and service can be very tedious in health insurance. There are two types of claims: reimbursement and cashless hospitalization. The process for reimbursement is you get hospitalized. It can be a planned hospitalization or it can be an accident. It can be an admission in a non network hospital. By non network, I mean that particular hospital or clinic is not on and not empaneled by the insurance company. So you get admitted, the surgery is done, the procedure is done, you get your final bill, you settle it. Once you've settled it, you have to then file a claim document, a reimbursement claim document, along with all original bills, reports, discharge summary, medical bills, scans, whatever you have, but they have to be in original. This is done by us at IMMPL for you. If there are any additional requirements, that is also taken care of by us. And once these documents are all ready and signed, we give them to the insurance company. And I think within 30 days, the claim is settled. So that is how a reimbursement process works. So in reimbursement, the insurer must be notified of the hospitalization. An email to the insurer with basic details of hospitalization, hospital name, admission must be shared. All claim forms must be submitted within 30 days of date of discharge. So over here, I'll just add one thing. Whilst the main claim has to be submitted 30 days prior, your pre and post surgery, which is normally either 30 days or 60 days or 60 days and 90 days, that can be a separate reimbursement claim once all the bills over that period of time are gathered. So, this particular 30-day period is for the main claim of hospitalization. While hospitalized, please keep the client aware of the list of documents required. You share it with us. We ensure that all the documents are collected and all original bills are mandatory. Here, I would advise that once the original bills are submitted, you don't get them back. So it is always better to keep a copy of everything that you're submitting to the insurance company. Let's look at cashless hospitalization. Here, the insurance company would give you a e-card. So you have to go to the hospital prior to the 2 or 3 days, at least 2 or 3 days prior to the procedure. Go to the insurance desk, submit an e-card and ID proof. They will raise a cashless request and send it to the insurance company or the TPA, which is then approved by them and sent back to the hospital. The procedure is done and the claim is settled directly by uh, the insurance company. Here, there is no question of you submitting any bills or any, and it is all done by the hospital itself. Get admitted to a hospital. This is for an emergency. Now, in an emergency, obviously, you would not be able to go 2 or 3 days prior to the hospitalization. So, once you get admitted, the cashless request has to be raised within 24 hours. If some hospitals or some insurance companies allow up to 48 hours, but it is always better to do it within 24 hours. Otherwise, it will become a reimbursement claim, which means that you would have to initially pay for the full bill and then claim it from the insurance company. So this is something that you probably wouldn't know do if you were the patient yourself. The attendant or somebody in the family needs to be aware that this process has to be completed within 24 hours. Then it's the same. The request is approved by the TPA or the insurer, and the claim settlement is done at the time of discharge. So, points to note: for planned hospitalization, it must be done 2 or 3 days before the procedure. Emergency hospitalization within 24 hours of admission. Once the claim is registered, IMMPL can assist with any insurer related concerns. So, unless the claim is registered, we would not be able to approach the insurance company for any data, any help, any assistance that is required. Okay. Without the claim registration, neither the insurance team nor the insurer can directly confirm if a particular procedure illness is covered in the policy or not. Um, the final bill, hospital expenses are subject to the type of room you select. So I'm sure everybody is aware that if you were to go for an appendicitis operation, and if you were to take a shared accommodation, your bill would be the lowest. If you go to a private room, your bill would be about 20-25% more. I'm just giving you a ballpark figure. And if you go in to a suite, then it will be 50% more. But it all depends. The procedure done is the same, the doctor is the same, the methods used are the same, but the bill goes up according to the room you select. Now, in most insurance companies, the policies cover the whatever charges that are raised by the hospital. So there are public sector companies, or there are some products where you have what are known as a 1% and 2% limit, sublimit. So if you have a sum assured of 5 lakhs and there is a sublimit of 1%, 1% of 5 lakhs is 5,000. So your room, if it is more than 5,000, the difference you have to bear. So that happens mainly with public sector companies and a few products of private insurance companies. So all network hospitals have MOUs signed with the insurer. Claims are settled as per the MOU. For daycare procedures and procedures with packages, the client must check at the hospital insurance desk on the coverage list set in the policy. Here, what I would also advise most people to do is to try and find out from your doctor exactly how much it's going to cost and what the hospital is going to charge. Sometimes even doctors are not aware of what the hospital is going to charge till they've done so, and it is a very high figure. So it is always better to take your doctor in confidence and ask him how much it would be or how much you would end up spending out of your pocket, so that it's not a rude surprise when you get the final settlement. So there are two types of approval. There's a pre-approval and a pre-authorization approval. This is very important. When you go in, when you are hospitalized and you go to the insurance desk, when the hospital sends the initial request to the insurer, let's say, I'll give you an example. Say your procedure is going to cost you a total of 1 lakh. The TPA or the insurance company is not going to approve 1 lakh at the first instant itself. They will approve, say, about 40,000 or 50,000 as a pre-approval or a pre-auth. This does not mean that that is all that they are going to pay. Once the procedure done is done and the final bill is sent to them by the hospital, they will have a look at it and settle the remainder amount. Okay, that is called the final approval. We've had instances of clients or patients getting very nervous or very upset when they find that only 40,000 has been approved and 60,000 not. No, it's just a pre-approval. Balance is approved on submission of final bills by the hospital to the insurance company. Now we'll open it up for questions. Malvika, you can.
Yes, sir. So we'll now move on to the Q&A session. We already have a few questions lined up to begin with. I'll now read out the questions for you. So one question is it advisable to make the payment for the claim and take reimbursement to avoid overcharging?
Um, I'll be very honest with you. I have done that myself a couple of times, not because I was in a hospital which was not enlisted or empaneled by the insurance company, but I just wanted to get out of the hospital quicker. So, and the bill was not very large. It was just about 1,10,000 rupees or so. So I did make the payment and claimed it as a reimbursement. Fortunately, now there is a time limit that has to be adhered to by hospitals and insurance companies. Cashless claims have to be settled within 2 hours. Previously, it used to take 10 hours, 12 hours. It also used to go over to the next day. So if you and if you wanted to avoid that, yes, if the bill was too not too large, you pay the amount and claim it as reimbursement.
Sure. And the next question is, please elaborate on the two health insurance companies you have identified to distribute. Additional details on their USP will help.
So the two companies that we are dealing with, actually we are dealing with three. The reason I put HDFC Ergo in general insurance is because before it became HDFC Ergo, it was Apollo Munich, and that was a standalone health insurance company. HDFC Ergo took it over, and then it became a general insurance company. So we have the license with Manipal Signa, Niva Bupa, and HDFC Ergo. We've selected these three companies on basis of their products. Um, their products offer a lot of benefits. I won't get into all the benefits, but I'll give you an example. HDFC Ergo has specialized policies for diabetics and hypertensive clients, where coverage starts from day one. Um, Niva Bupa has a policy or an option to take a low sum insured of 10 lakhs and a super top up of 90 lakhs, which gives you a total cover of 1 crore at a very reasonable premium. So, like I said, the top up, super top up premiums are far lower than the base policy. So, you can definitely look at these companies. Manipal Signa has been, before it became Manipal Signa, it used to be Signa TTK, and we have been empaneled with them since then. HDFC Ergo, Manipal Signa, and Niva Bupa, who were Max Bupa, have been the three companies that have been the oldest. Their products, they keep coming out with new products which are more innovative, and we have been porting policies of our existing customers into better products, either with the same company or with another company, depending on the needs of the client.
Okay, if it is not an emergency and if we know that the specific hospital may overcharge, then is it better for reimbursement mode?
Um, if it is not an emergency, and may overcharge. See here, once again, uh, what I would suggest is that if your insurance company doesn't mind paying, you should go ahead with the cashless. But if the bill is large, say you have to shell out 7 lakhs, 8 lakhs, 9 lakhs, it is better to go for cashless instead of reimbursement, because reimbursement will take about 30 days for you to claim your money back. Sometimes it can go to a little longer than that. So if the hospital is overcharging and you feel that you would be out of pocket, like if they're going to charge you 7 lakhs and you're going to be out of pocket by 1 or 2 lakhs, the same scenario would also happen if you made a reimbursement claim. So if the insurer and the hospital are okay with it, let it go cashless. Why would you like to, why would you want to put your money in and wait for 30 days or 40 days for your money to come back?
Next question is, please clarify a medical insurance for rupees 10 million versus B, a medical insurance of rupees 1 million plus top up of rupees 9 million equals to 10 million. Which one is better and why?
Like I said, your 10 million, or let me put it this way. Let me put it as 10 lakhs or 10 million. Let it be 10 million. If you were to take a single policy of 10 million, that becomes your base sum assured. Now, base policy premiums are very high. So let me put it this way: you would probably end up paying about 2 lakh rupees of premium for a base policy of 10 million. Now, if you were to take a base policy of 1 million, your premium would be about 30 to 35,000. And a 9 million top up would be another 20 to 25,000. So that would come to a total of about 45,000 maximum. Whereas for a single policy of 10 million, you probably end up paying 2 lakhs. So, and the coverage amount is the same. So it is always better to take a base policy with a super top up.
Next question is, how does National Health Care Exchange change the medical insurance canvas in India? We have National Health Care Exchange connector for insurance companies. Can we work together to build the digital ecosystem?
Look, and can I see that question? I'm not clear on that. One second. Where's that question? Uh,
In the Q&A box, and I have posted in the chat box for you.
Now, this I would definitely have to get back to you on this. I would have to do a little more research on this before I make any comment on this, because it's not to the it's different. I would have to get back after I've gone through what the exchange has to offer.
Sure, sir. Uh, Another question is, am I allowed to move quote from one insurance company to another without any loss of cover, etc.?
You can shift from one insurance company to another insurance company. Most definitely, you can. All the benefits that you have accumulated in the current policy, by ways of pre-existing waiting periods, or would also transfer. Bonuses would not transfer, they get increased as sum insured in the new policy, but your waiting periods would definitely transfer. So that is something that is taken care of. Yes, you can change from one insurance company to another by porting your policy.
Okay. I am 70 with diabetes. Wife is 65 with hypertension. Is there any good policy for us?
70 is a little over the age. I think the cutoff age for the policies that I mentioned with HDFC Ergo, which covers diabetes and hypertension, is 65. But your wife could definitely look at it.
You have answered on cost for top up, but not coverage aspect. Is there a difference in how the policy operates?
No, there is no difference. There is no difference. They all operate in the same fashion. Okay, whether it's a super top up or a base policy, they operate in the same fashion.
Okay. Are there insurance policies that cover alternative remedies given our government boost to Ayush?
All insurance companies have this Ayush benefit in them, the Ayush treatment. The only caveat is you have to be admitted to a full-fledged Ayurvedic hospital or clinic, which is recognized by the government to be able to make a claim.
After porting, will the insurance premium be the same as I was paying earlier?
No, it would probably not be the same, because the number one, the company has changed, the product has changed. That particular company that you're porting to would have its own cost structure, and you would have to pay the premium that comes up for that particular product.
Another question has come. I have two policies. Can I aggregate the sum assured for a single treatment? How
Now,
can I share original documents for two payers?
this is a very good question. It is not recommended, as far as possible, to make to use two insurance policies with for one claim, two different companies for one claim. I'll tell you why. The policy that is used first, say you had a policy with HDFC Ergo. HDFC Ergo would take all the original documents to settle their part of the claim. Now, the claim was more than what you had cover with HDFC Ergo for. So you then say, okay, I have one policy with Niva Bupa. The rest you can claim from Niva Bupa. The hospital is not going to give you a second set of originals. It becomes the onus of the first insurance company to share certified true copies to the second company. Believe me, the red tape in this is tremendous. You will be running pillar to post, especially if it's a cashless claim. Be rest assured it will not happen on the same day. It is definitely not advisable to have two policies in separate companies for a single claim. We at IMMPL make sure that a client has a base policy, a super top up policy with the same company. Although they are two separate policies, they're with the same company, and only one set of documents needs to be submitted for a claim.
The next question is, should one also take Ayushman Bharat PMJ policy in spite of having other policies?
So yes, you can. You can look at taking Ayushman Bharat. It's free. It's a 5 lakh rupee limit. But the unfortunate part is that not many hospitals are getting registered with the Ayushman Bharat scheme. I'll give you an example. Today in Bangalore, we have only two hospitals. One of them is Mahavir Jain Hospital, and another hospital I forget the name of. But Manipal hospitals, Apollo hospitals, they have still not registered with the Ayushman Bharat program, which they're supposed to, but they refuse to because it's the treatment is free. For them it's a loss. So unless the government does something and forces them to register, right now Ayushman Bharat options are very limited where hospitals are concerned.
If one gets transferred halfway during the treatment to another provider, how does the cashless process work?
Like I explained to you, uh, the first insurer would have to share certified true copies with the second insurer. Okay, and that's where your problems will start. The hospital does not give you originals again. They give you only one set of originals. So it's the same thing. You would have to run to ensure that the first insurer sends the documents over to the second insurer so that your claim is settled totally.
There are no more questions. So that brings us to the end of the Q&A session. We are sharing the scanner right now. You can take a moment to provide your feedback. It would be greatly appreciated. So thank you very much, sir, for the insightful webinar on the health insurance claim settlement process. As we have observed, many individuals have health insurance but lack clarity on how the claim process works. I am confident that today's session has helped raise awareness and brought much needed clarity on this important aspect. Thank you everyone for making it today. We hope this was informative. We will continue to cover various such topics in our upcoming webinars. Thank you once again for joining.
Thank you.